Hi, hello, welcome to Letham Trading. Now we are going to see Nifty end of the day analysis of 16th June 2022 and the trade setup for tomorrow. See friends, the CPR is in downtrend. What we discussed yesterday, if we see a CPR in a downtrend, we will see for a put position. Okay. And this market opening is gap up. So the markets closed in the previous session here and the market opened here, right? One thing I would like to tell you here is the distance between the pivots. See this, that generally from H4 to H5 there will be at least 100 points distance, and from L3 to L4 there will be 100 points distance. But in today's graph, the distance between H4 to H5 and the L3 distances are just compressed, because in the daily time frame, if you observe the graph, the market formed an inside candle. That was the reason for these pivots to get reduced, right? This is somewhat indicating that the market is going to be trendy. Why? Because if you observe here, if Nifty breaks this point, or Bank Nifty, see, Bank Nifty also has small space. Generally the market needs space, it has to travel, right? So if Bank Nifty has broken certain level, definitely the Nifty will also break some level. See, it is indicating that one sector is breaking a supply zone and automatically it is coming down, and that was the reason Nifty is coming down. So what I'm trying to tell you is there are continuous supports, but if Nifty is trying to take a support here at this point, at that time parallelly the Bank Nifty has already broken the level, so it was continuously falling, because any one sector will fall because it has broken the supply zone. That was the reason Nifty is continuously falling. See the first 5 minutes candle, I don't want to confuse you, it will be very clear when you are a experienced trader. You will get a clear idea. See the first 5 minutes candle. Whenever the market opens gap up, you should see the range. See, from the last few days it was in a range, right? I will be bullish if market, though it has opened gap up, the first 5 minutes candle should form a bullish pin bar by breaking the few days support or few days range. So see here, this was the few days range, right? If the market has taken a support here with this first 5 minutes candle, then I'll be bullish. But what happened to the market? See, it was a negative sentiment, right? In these days the market was negative, but what this gap down indicating, sorry, this gap up, suddenly the gap up, if sudden gap up opens in the market should form bullishness, that is a bullish pin bar or a green candle, that will indicate that the market is going to be trendy on that day. But what happened today? See, if market opened above this 3 days range, if it market opened above this range, there may be a chance like the market is going to be trendy. But what happened? The market opened inside these 3 days range. There was a clear resistance here at this point, and see here, the first 5 minutes candle is an indecisive candle, and it formed a wick and it got rejected from the top. That is a clear resistance. So the first 5 minutes candle, I was clear that the market is going to fall, and the second candle is also clearly indicating that the market is going to fall. By keeping a stop loss here above this first 5 minutes candle, it was very small stop loss, right? If you enter here at this point, see, it was a red candle, right? You should wait for some time, like see this first 5 minutes candle. The first 5 minutes candle to the half of first 5 minutes candle. If you waited for the first 5 minutes candle half of the position, your stop loss will become very small. So this is the point where you can enter the trade, and the target will be according to your risk reward ratio. And see this, if you observe the market clearly, this H5, this is H5, right? If the market has taken a good support at H5, then the market will go up definitely. But what happened, it has not taken a support. See this candle, the wick is there, right? In the first 5 minutes candle, see, not first 5 minutes candle, you should always wait for the 5 minutes candle to close. Here this wick, in the live market, the wick will be very green, right? With that green candle, you will feel like the market is turning bullish. But if you wait for the 5 minutes candle to close, you will get a clear price action. See this, it got rejected from the H5. If market rejected from the H5, it is becoming a supply zone. If the market is above H5, it is acting as a demand zone. So this candle is indicating that the market is, that H5 is acting as a supply zone. So that is the point where we get a clear idea that the market is going to be bearish, right? So continuously it was getting rejected. But if you don't see the first, if you don't see the candle closing, you will be like, okay, the market is going up, okay, the market is going up. The market is not going up, it is forming wicks that the market is turning to bearishness. So if you observe here, the first H5 was crossed, okay, and if it came near previous day high. So here at this point also it got rejected. In everywhere it is getting rejected again and again, because if you observe here, this candle has broken this previous day high, but at that point of time the bank nifty has not even came near previous day's high. So the market will again come to that point, right? So if bank nifty comes to this point, the nifty will again fall to below previous day low. So that was the reason here it again came below to previous day low. So this was the reason the market has continuously fallen, since the distance between the pivots is very less and it was very trendy. See, and I was like, if the market consolidates here at this CPR, again the market will fall. But the market has not even consolidated today. It was continuously falling, but it is not volatile. See this, it is forming a small green candles. If a big bearish candle, this is what called volatility, and the market will most probably get reversed. But these small candles are indicating that the market is going to be trendy and the market is not volatile, right? But this much fall, you should book or not, that is your see, you can trail your stop loss, but trailing your stop loss should be made only after a good experience only, okay? And we'll move on to the tomorrow's trade setup. See, since it is very trendy today, the CPR and the Camarilla levels, everything was very wide tomorrow. See the distance, this is very wide CPR, right? The distance between the top CPR to bottom CPR is more than 150 points. See, generally 150 points distance will be in bank nifty. In nifty, if it is 150 points, it is very wide. And if you observe here, mostly from L3 to H3, the distance will be if it is okay, it will be 100 points, but it is more than 200 points. So you should be very careful while trading tomorrow, because you will feel like there is a small stop loss, but the distance will matter you a lot. If you trade, suppose if you take a trade here, the stop loss will be up to top CPR or H4. Generally the distance will be very less, but here, since the distance is very less, your stop loss will become more. That is what you need to observe. If you avoid the trading also, no issue tomorrow. If you have a clear projection and you are 90% accurate about the trade, then only take trade tomorrow. See, the closing here, the candle closed here at this point, that is below CPR, and the CPR is in downtrend, right? See, the CPR is in downtrend, so we'll wait for a put position. If market opens gap up, what if market opens gap up? If it breaks H3 and the bottom CPR, then we'll go for a put position and the target will be L3, right? What if market opens a huge gap up and if it cross H4? If the market opens a huge gap up and if it cross H4, we'll go for a call position by seeing a clear price action. See, the type of candle will indicate us that the market will come to a retest or not. If it is a pin bar, it will not come for retest, but if it is not a pin bar, then definitely the market may come to the retest. In the live market, according to the 20 EMA price action and the candle type of formation will give us the clear direction that the market is going to be retested or not. And if market opens flat and if it comes down, that will not be a good scenario. So avoid taking L3 to H3 position. Please try to take from bottom CPR to L3 position only. And put position is from H3 to L3 only, and maybe the market will revolve only from L3 to L4 or H3 to H4 only, because the distance is very high between those points. So if market opens here at this point, this H3 will act as a resistance, and L3 to L4 movement may be possible. If market opens flat and if it immediately cross L4, then definitely go for a put position only, right? That is two put positions, and the only call position where we can trade is H4 crossing. Thank you. I hope this video will help you. Please subscribe to our channel.